Hi there, I'm Daniel Lader from Lader CPA & Associates. If you're a mental health practitioner running a private practice and you're thinking about setting up an S corporation, stick around. Today we'll walk through what an S corporation is, why so many therapists use them, the benefits, the downsides, how to set one up, the rules you need to follow, and a deeper dive into what the IRS calls reasonable compensation. I'll even throw in a couple of stories along the way to help it all make sense. Let's start at the top. What is an S Corp? An S corporation is a type of tax classification, not a legal structure. It's basically a way for your business to avoid double taxation. Instead of the business paying its own taxes and then you paying tax again when you take the money out, the S Corp lets all the profit pass through to you as the owner. The business files a separate return, Form 1120-S, and then issues you a K-1, which tells you how much profit you report on your personal taxes. So you still pay tax, but only once, on your own return. It's popular with small business owners and especially therapists because it offers a clean way to save on self-employment taxes, which we'll get to next. So why do therapists often switch to S Corps? Here are the biggest reasons. You avoid double taxation. You're not taxed at both the business level and the personal level like you would be with a C Corp. You can save money on self-employment tax. That's the big one. When you're a sole proprietor or a single member LLC, all your business profit is subject to Social Security and Medicare tax. But with an S Corp, only the part you pay yourself as a W-2 salary is subject to payroll taxes. The rest can come to you as distributions, which are not subject to payroll or self-employment tax. Let me give you a quick example. Dr. A is a solo therapist in private practice. She brings in about $150,000 in net income. As a sole proprietor, she'd pay self-employment tax on the entire $150,000. But if she elects S Corp status and pays herself a $90,000 W-2 salary, she'd only pay payroll taxes on that $90,000. The remaining $60,000 comes through as distributions, still taxable but not subject to Medicare or Social Security tax. That move alone could save her thousands of dollars per year. Now, let's not get carried away. S Corps aren't perfect for everyone. Here are the main drawbacks to keep in mind. Eligibility rules. You have to be a U.S. citizen or resident. You cannot have more than 100 shareholders, and you can only have one class of stock. So if you're planning to raise money or bring in non-U.S. investors, this structure won't work. You must pay yourself a reasonable salary before taking any profits as distributions. That means running payroll, filing W-2s, and withholding taxes, just like you would for an employee. It comes with more admin. You have to file Form 2553 to make the election, file Form 1120-S every year, issue K-1s, run payroll, and keep very clean records. A lot of solo therapists aren't prepared for that jump in complexity. Audit risk is higher. The IRS keeps a close eye on S Corps, especially when it comes to underpaying owner salaries and deducting business interest. And here's a big one people miss. If your business carries a lot of debt, an S Corp might not be ideal. That's because debt taken on by the corporation doesn't give you, the owner, any basis to deduct losses. If your business runs a loss in the early years and it's funded by loans, you might not be able to deduct that loss on your personal tax return. For example, I had a client who borrowed $75,000 to launch her group practice. Because the debt was taken out in the name of her S Corp, she couldn't deduct the first year losses until the S Corp made profits in later years. She would have had a better tax outcome if she had started as an LLC. If you've weighed the pros and cons and want to move forward, here's how to do it. Form a legal entity. Most therapists choose to form an LLC. In some states, you are required to go straight to a corporation. But for most small practices, an LLC taxed as an S Corp works really well. Apply for an EIN from the IRS. You'll also need to register for payroll taxes in your state. File Form 2553. this is what actually elects S-Corp status. It needs to be signed by all shareholders and generally filed by March 15th of the year you want it to apply. If you need to file late, don't worry. The IRS allows up to 3 years and 75 days to file late with no penalties. Make sure you talk with your tax advisor. Set up payroll. You'll need to pay yourself a W-2 salary, so you need a payroll provider or system to handle that. File Form 1120-S each year. This is your corporate tax return. And issue yourself a K-1. There are some other steps like bookkeeping adjustments, adjusting your quarterly estimated taxes, calculating an appropriate amount of taxes withheld from your paycheck, but that's the big picture. Don't go it alone. Work with a CPA who understands small service-based businesses. S-Corps come with rules, and breaking them can cause big headaches, including accidentally revoking the S-Corp election. You can only have 100 shareholders, and they all have to be U.S. individuals or certain trusts and estates. You can only have one class of stock, so no preferred shares or different voting rights. Passive income rules apply. If your practice used to be a C Corp and earns too much income from passive sources like investments or rent, it might trigger corporate level tax. There's also a limit on how much business interest you can deduct under Section 163J. Not common for therapists, but worth noting if you're using loans to grow. You must run payroll and pay yourself before taking out profits. Most S-Corp issues come down to poor compliance, not following the rules. Stay on top of them, and it can be a very effective structure. All right, let's dig into what the IRS means by reasonable compensation. Here's the deal. If you're an owner-employee of an S-Corp, the IRS expects you to pay yourself a fair market wage for the work you do. Not more, not less. There's no hard rule, but they look at things like your training and experience, how many hours you work, what similar therapists in your area earn, the gross and net income of the practice. Why does this matter? Because distributions aren't subject to payroll taxes, but your salary is. So if you pay yourself too little and take the rest as distributions, you're skipping payroll taxes. And the IRS doesn't like that. Let me give you an example. Dr. B is a licensed therapist, seeing clients about 25 hours a week. Her practice brings in $200,000 in revenue and nets $100,000 after expenses. A reasonable salary for her in that situation might be $80,000. That's what she should pay herself via W-2. The other $20,000, that can be a distribution, not subject to payroll tax. If she tries to pay herself only $40,000 and takes $60,000 as distribution, she's probably underpaying herself, and if the IRS audits, they'll reclassify some of that $60,000 as wages, then hit her with penalties and back payroll taxes. So here's the bottom line. S-Corps can be a powerful way to reduce self-employment tax and keep more of your income, especially once your practice starts making consistent profits. But it's not for everyone. They come with rules, paperwork, and a requirement to pay yourself fairly. If your business is just starting out or you've taken on a lot of debt, there might be better structures until you're more profitable. But if your numbers are there and you follow the rules, an S-Corp can be a fantastic tool to grow and protect your income. If you're unsure whether an S-Corp is the right move for your practice, reach out. This is exactly the kind of strategic planning I help therapists with, figuring out how to keep more of what you earn without getting in trouble with the IRS. Don't forget to like, subscribe, and drop a comment if there's another topic you want me to cover, like retirement plans, hiring employees, or how to pay for continuing education tax-free. Thanks for watching, and I'll see you next time.